Wagwan, welcome back to my YouTube channel. My name is Dreycosting. If it's your first time over here, what we do for this channel is to analyze the financial markets, like chop it up in pieces, so each and everyone can understand. So today, a Friday, you know we do it on a Friday already, financial corner, right? So Friday is more just sitting down, just relax, just hold a reasoning. Today's topic, I'm gonna talk about how you can leverage an LLC, a limited liability company, in order to make more money, save more money. In contrast to you just being a sole trader or a sole proprietor. So let's hold a reasoning. So the first thing you have to know is that the difference between a sole trader and a business, right? So with a sole trader, simple put, one of the things we like to look at is this. If you are running a business as a sole trader, if someone's supposed to sue you or anything like that, right? Then the court and the law can come all the way down to your personal assets, like the bed in your bedroom, your TV, and so on, and use these assets to pay off, right, the complainant, your personal bank account, etc. Oh, how did I leave all that, right? And this is not scripted. You know, we do it on a Friday. We just all our reasoning and we just attack, right? So, but for a company, if someone's supposed to sue, they can only take the asset that the company owns. So there's like this invisible, let me recline my seat a little bit. There's like this invisible shield between the owner of the business and the business itself. So the business itself is seen as a person by itself. And in accounting and business, this is what we call the entity concept. But that's a whole of reasoning. So let me show you can now leverage stuff, right? One of the first things you want to do when you're leveraging stuff is to transfer like personal cars or anything like that, personal assets over to the company. Why would you want to do this? Let's watch it now. If you're running stuff through the company, right? The assets that are now within the company, you're going to calculate on it what is called depreciation, right? With this depreciation, this is going to now reduce your expense. And if your expense is reduced, that means you pay less taxes. Talking about taxes, watch me again. If you are working for the company, right, and you're not an individual, then the company pays you, right? And if the company pays you, then therefore you'll be paying payroll taxes for yourself on behalf of the company. But these same payroll taxes, right, these same payroll taxes will be deducted as expense as well. And if it's deducted as expense, right, that means less profits. Less profit means smaller tax. Oh, man. You guys see what I'm getting at? This is why it's important if you're running a really good business to really go LLC. Watch me again, right? One of the greatest thing now, right, is this. While we as accountants, yes, I'm an accountant, a very experienced one. Watch me now. While we as accountants calculate depreciation, right? That is accounting depreciation. The taxman, Uncle Sam, or the taxman, or whatever you want to call him, IRS, whatever you want to call him, right? they calculate something that is called capital allowance. Right? So the capital allowance is accelerated much more faster than the accounting depreciation. So the capital allowance and the accounting depreciation is one and the same. It's depreciating the assets, right? But let me show you how it works and just show a few figures, right? So in the initial year, the taxman is going to give you a break, right? So here it goes. So while I'll be calculating 10% on, say, for argument's sake, furniture and equipment, right? Or should I say furniture and fixtures, right? If I'm calculating 10% on furniture and fixtures in the first year, the taxman is going to calculate 20% on furniture and fixtures in the first year. How does this help you? After you have taken out all of those nice expenses, right, to come to a reduced profit, to pay less tax, then you have what's next, that's called the capital allowance. So if you have a larger capital allowance, right, that is going to take out more from the profit, then therefore you have much more less tax to pay. Or should I say far more less tax to pay? You guys see where I'm going? Watch you again. The next benefit of a LLC, right, running a business, is that you could get loans much more easier, right? You could get loans much more easier. You just set up a nice projection, but whenever you're a sole trader, what the bank wants to do is to start to look in your personal life, your personal assets, your personal accounts, this and that, right? But for the business, they're going to just look at the business as itself. So let's look at this simple scenario. Your personal life, if you're an adult of 30 years or plus, then the bank is going to try to assess your entire history of your life, since you start working at least. However, the difference is, for the company, the bank is going to assess from the birth of the company. So if the company is on 2 years or so on, the bank is just going to look at the prior year and ask you to do a projection of about 5 years or whatever the term of the loan is. So that takes less stress off you as an individual. So what you're running now, give you a quick tip. So when you get the loan now, right, you can now invest that loan in your company, right, and start to pay yourself more. You get what I'm saying? So you have to know how to match the bank loan that you wanted to get versus the tax that you didn't want to pay right away. So it's better. I hope the authority is not watching this one enough. If your intention, right? If your intention is to get a loan, it's always better to get the loan, right, after you have filed your taxes, right? Because the loan would inject more capital for you to push your business, which may increase revenue. And if revenue increase, that means your profit is going to increase. If your profit increase, your tax is going to increase. Does that make any sense? Right? So you want to try to get the loan after, right, you have filed your taxes, right? You take that loan, invest that loan into your company, revenue increase, right? You try to grow your company. So always try to go for the loan, right, after you have filed your taxes. And there's so much more I could have said in this video. If you need any personal financial help, or should I say business help, right, just send me a DM on Instagram. I use Instagram mostly. Or you could just go down in the description of this video and just pick any medium you want to contact me by, right? You could also send me an email if you're not on social media. Alright? So just go and big up on yourself and enjoy the rest of your weekend. I'm out.